58 million transactions in a single day. Sub-second finality. Gas fees of 1 cent. Other blockchains process transactions one by one in a queue. SUI executes them in parallel. That's the difference. But speed means nothing without adoption. So today, I'm breaking down what's actually happening, the partnerships, the money flowing in, the risks. And at the end, I'll show you the exact millionaire math. 3 scenarios: bear, base, and bull. Exactly how many SUI tokens you need in each one to retire with $1 million. Before we get to the topic, the numbers tell me that many of you who watch aren't subscribed. So if you're enjoying the content, hit that subscribe button now. It tells us that what we do matters to you. Now, let's get to SUI. This is not a financial advice, always do your own research. SUI emerged in 2023, launching its mainnet and one of the most anticipated tokens of the cycle. Its origin story is crucial. The founding team, Mysten Labs, is composed of former lead engineers from Meta, formerly Facebook, who worked on the DM blockchain and the Move programming language. Their core mission is to build a scalable, developer-friendly, and secure Layer 1 that can truly handle mass Web3 adoption, particularly in gaming and high-throughput DeFi. In December 2021, the company raised $36 million in a Series A round led by Andreessen Horowitz. This was followed by a substantial $300 million raise at a $2 billion valuation, which was led by FTX Ventures and supported by industry giants such as Binance Labs, Coinbase Ventures, and Circle Ventures. See, with all this money raised, the key technology is where SUI actually shines, and this is the most important concept for investors like you and me. Most blockchains work like a traditional bank or even Ethereum, run on an account-based model. Think of it like a single lane road. Every single transaction, whether it's a simple token transfer or a complex smart contract swap, must be processed one after the other in a long queue. This causes congestion and those high gas fees that we all hate. Well, SUI fundamentally changes this using an object-centric model. Here's the big novelty. Imagine switching that single lane road to a massive multi-lane highway. Because SUI treats every asset as a unique, self-contained object, and the network can see which transactions don't interfere with each other. The benefit, though, is that if I send you an NFT and someone else is listing a token on a DEX, SUI processes both at the exact same time on separate lanes by using its narwhal and bullshark consensus. This is called parallel execution, and with that comes no congestion and low costs. But why would this matter to you? Well, this is how SUI delivers its promised sub-second finality and the capability to scale to speeds that rival Visa or MasterCard. It's built for global adoption, and from our perspective as investors, that's very good news. After this brief intro, let's break down the numbers that really matter. The total supply of SUI is capped at 10 billion tokens. Currently, 3.7 billion are circulating. That's 37% of the total supply. The remaining 63% is locked in vesting schedules. Now, I want us to look at the token allocation. The SUI Foundation owns just over 52% of the total supply, and their tokens are locked until 2030. The Community Reserve account holds 10.6% to reward validators, while 9.5% are allocated for stake subsidies. Then, Series A venture capital received 7.1% and Series B got 7%. Early contributors and community access hold 6% each, and to top it off, the Mysten Labs treasury has 1.6%. Now, here's the critical part when it comes to vesting. SUI had a 1-year cliff period after mainnet launch ending in May 2024, meaning no tokens were released during that period. Since then, monthly unlocks have been releasing tokens gradually. The vesting schedules are structured. Series A ended recently in November 2025, Series B ends in May 2026, and early contributors finish in 2030. Recent token unlocks include approximately 55 million tokens in December, worth around $82 million. Another major unlock was on June 1st, 2025, estimated at over $215 million worth of tokens. But we need to pay attention to the inflation mechanics too. Gas fees on SUI are partially burned, creating deflationary pressure. There's also a storage fund mechanism that compensates validators fairly without inflating supply. This balanced approach aims for long-term sustainability. The staking yields for delegators currently range from 1.5% to 3% APY, depending on validator performance and commission rates. Validators earn rewards based on their share of total network stake. Now, I know what you're thinking. That's low compared to the 80% APR you see on some obscure altcoins, tokens. But to me, this is actually a bullish signal for SUI's long-term health. The project seems to be built for stability and massive upside, not just for high-risk inflationary yield farming, and that's good. I would like us to dedicate some time to SUI's technical performance, which is genuinely impressive. The network processed 7.5 billion transactions in 2024, with daily peaks hitting over 58 million. Average transaction fees are just about 1 cent, which is 600% cheaper than Solana and over 86,000% cheaper than Ethereum. Using the Mysticeti consensus engine, SUI achieved 390 milliseconds latency while processing the notorious 297,000 transactions per second. That is a sub-second finality under huge load. Major partnerships are rolling in fast as well. Circle launched native USDC on SUI in September 2024. The Microsoft partnership, on the other hand, positions SUI for enterprise blockchain integration. And Digital will tokenize real-world assets on SUI. And lastly, the Phantom and Backpack wallets integrated SUI support, giving millions of existing users easy access. The DeFi ecosystem is exploding too. Total value locked grew 13 times in a single year, from $200 million in January to $2.6 billion in October this year. That is massive growth. The ecosystem is secured by key infrastructure, including the native DeepBook v3 central limit order book and top lending platforms like Navy Protocol, which is recognized for its robust security audits. Gaming is huge on SUI. Over 65 studios are building games with more than 70 titles. The SUI Play OX1 handheld gaming console brings blockchain gaming mainstream. Their console has already sold out its initial pre-order batch, confirming massive consumer demand for SUI's hardware-led approach. This physical product is, I would say, key to mass adoption, delivering a seamless experience through ZK login and sponsored transactions that completely eliminate the need for users to deal with crypto wallets or gas fees. The trends in tech point to AI agents being the next frontier. Here, SUI AI is the leading launchpad for autonomous AI agents on the network. Agents like AIDA focus on onboarding real users with high-quality content. The Talus platform enables tokenized AI agents. Atoma Network is building AI development infrastructure on SUI. Ultimately, the sub-second finality makes SUI perfect for AI to AI agent coordination. A favorite and contested area of analysis is the decentralization and risks around the project. In SUI's case, decentralization is achieved through a set of independent validators who secure the network via DPoS, while the foundation actively works to onboard a diverse set of node operators. The initial concentration of ownership, including significant allocations to VCs and the team, remains a central risk point. Now let's address the elephant in the room: risk. Every layer 1 faces challenges, and SUI faced an early stress test that actually revealed a huge strength. The biggest incident was a $200 million exploit on the major DEX Cetus. While the vulnerability was in the protocol's code, not the SUI network itself, the recovery showcased SUI's unique power. Here's what the response was. In a rapid and highly coordinated move, SUI's validators used the network's architectural capabilities to instantly freeze over $160 million of the stolen funds. The SUI Foundation then provided a substantial loan to ensure 100% of affected users were fully reimbursed. This action highlights SUI's powerful coordination and institutional backing. SUI passed a $200 million stress test by acting decisively to protect its users, ultimately ensuring ecosystem stability. Massive validation for any serious investor, I would say. Okay, now let's look at SUI's price journey. It launched at $1.50 in May 2023. By October 2023, it hit an all-time low of 36 cents. Recovery began in 2024 when SUI broke $2 in October and kept climbing. The bull run peaked at $5.35 on January 6, 2025, and right now the price is at $1.60 with a 69% discount. The market cap is above $6.1 billion. Now, for the million-dollar question, guys, how many SUI tokens do you need to become a millionaire? The bear case scenario is the following. If SUI makes a new all-time high, it could easily reach $6. That would be 3.75x from here. For that, we would need to buy 1,066,000 tokens, which would cost us over $250,000. Now for the base case scenario. SUI reaches $10. That would be a 6x from here and would require us to buy 100,000 tokens, which would cost us $160,000 right now. Okay, for my favorite part of all, the bullish scenario. SUI reaches $20. That would be a 12.5x from here, and we would have to buy 50,000 tokens worth $80,000. After all this millionaire math, you may be eager to pull the trigger on SUI now. But what exchange should you use? My suggestion for you is CoinEx, where you can get an up to $25 gift if you hit the link in the description now. CoinEx has been on the market for almost 10 years, and you can spot trade over 1,000 tokens there, including SUI. In case you're a high risk, high reward type of trader, you can also go for leverage trading, long or short any of the available pairs. CoinEx is a super easy to use. So go on and register from the link in the description, start trading and grab that $25 gift. Before we wrap up, we need to address the most significant sign that SUI is transitioning from a high growth crypto asset to a recognized institutionally investable asset. The final verdict is in the institutions. A new chapter for SUI investing has begun on Wall Street. Just approved by the SEC, the 2x leveraged SUI ETF issued by 21 shares is now live on the Nasdaq. SUI has also been included in the Bitwise 10 Large Cap Crypto Index by Vanguard, which is a major move that automatically exposes SUI to passive investment flows from major funds. Furthermore, the regulatory hurdle was cleared by Coinbase, granting New York approval for trading, signaling compliance with the strictest US regulations. Finally, regulated European banks like Amina Bank and Signum Bank are now offering SUI custody, trading, and even staking services to their clients. This trio of index inclusion, regulatory green lights, and regulated bank custody proves that SUI is viewed as an enterprise-grade investable asset, positioning it for a massive infusion of traditional finance capital. So there you have it. SUI is armed with a next-gen architecture designed for a global scale, a rapidly growing ecosystem focused on the high-value sectors of gaming and AI, and it has successfully passed major market and security stress tests. If you found this video valuable, guys, smash that like button now and subscribe for more crypto retirement math. I'll see you next time. Ciao.